SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. It's a bit of a late start this morning, kids, all kinds of stuff. But let's get started then, shall we? So let's focus on Bitcoin, as that's the most significant of all. But it's nice to see that our e-gold trade is working out quite nicely. Again, you know, respecting the signals and playing out the breakout now. So just to, you know, for those who are in this trade, it worked out perfectly. We did say that if you hadn't got in on this, that the best place would have been here, 58, so retesting that support, also backed up by the 10 exponential, and then now the power of the pump signal taking us up to our next major level of resistance, which is only 67 to 68, and see where we go from there. Anyway, we're not here about e-gold. It's just worth recognizing that some charts are responding well to their own setups, which is good. And so if we can take something like e-gold seriously and work on a trade like that, then maybe we can do it with everything else. So I suppose before we start on Bitcoin, let's just have a quick look at traditional markets with the Dixie actually having a big pump as a result of yesterday's Fed meeting. Look, I suppose it is what it is. It's definitely more powerful this time. I think any move above 112 has the potential to continue up to 113, 114 again. But I know it sounds silly, but I mean, if this is the move, if this is the breakdown move so far, it's not as aggressive as you might think. I know that sounds silly to say that, but it's not. That's a big move on the Dixie, a very significant big move. A little bit surprised at it really, to see the breakdown to start with and then the pump back up. The FOMC meeting, basically, it wasn't so much about the rate hike, it was I suppose the doom and gloom outlook on how you know, they don't expect to see anything particularly amazing anytime soon, and they're going to continue with the course and blah blah blah, and then talking about the not just the raising of rates, continuation of raising the rates, but the quantitative tightening. So getting rid of all the crap that they've bought and dumping it back into the market. So all of this has been in the pipeline, to be honest with you. So to see a reaction like this, I suppose, is to be expected, but I would have expected more. So far, if we're focused on this on a weekly, it's still reasonably good. If we look back on a daily, what we see is still a series of higher highs and higher lows so far. Everything's okay, to be honest with you, as far as I can see on the S&P, provided we're above this Bollinger Band center, which is sitting around 37, 35 thereabouts. So we'll see where the day goes, and as far as I'm concerned, I'm still in the camp of buy the dip on this one, to be honest with you. I know that sounds ridiculous, because everyone's going to be looking at solely the Dixie, and that's all they'll be focused on, but I actually think other charts are going to tell a bigger picture. Now, we've only got the pound up here today because the Bank of England are going to raise rates 75 basis points most likely, but there is a chance they'll go even harder. There's a lot of talk about that, so that's going to affect the Dixie to an extent. We're breaking down now on a technical basis, so failed to maintain the support at 114, and actually now we're below the ascending support trend line. So it looks to me like the pound is going to break down again, 110, maybe by the end of the day. We'll see where we go. Again, it's Bank of England stuff. We'll see what they say. Are they going to pivot, or are they going to go hard? The chances are that I think they're going to go hard, but we'll see. We'll see where they stand. If anyone is in the UK like me, our politics at the moment and monetary policy is all over the place. It's all over the place. It's the most uncertain of uncertain. It's crazy. It's mad, in fact. Nobody knows what's going to happen from week to week. You know, it was only a month ago I was getting excited that my taxes will be going down. Now I'm thinking they're going to be going up. So it's a roller coaster of a ride over here in the UK. What a mess. Never mind. So yeah, let's get on to Bitcoin. So it is relatively simple on the 4-hourly time frame. So this looks like it's rolling over now, and that's fine. We're below all major moving averages, apart from Bollinger Band. Sorry, not Bollinger Band. the 200 exponential, which is and would be a retest of a golden cross. And then below there is this area that we've highlighted for a little while, where it would be worthy of buying some if you hadn't bought any. Again, I'm not here to advise you financially, that's not what I'm doing, but you know, everyone wants things to go all the way up. And then I get loads of DMs about people saying, oh, you know, where shall I buy? And I said, well, I suppose the time to have bought would have been down here, and now we're going back down here. Everybody's probably going to be thinking we're going to be going lower. I mean, as far as a time cycle is concerned, Bitcoin's low should be put in anytime from September to December. I say it all the time, so November is right in the middle of that. It seems appropriate to suggest that we do move down, at least back down to the 20,000 to retest this 200 exponential, see if we get a reaction around there. Traditional markets are going to play a role in all of this as well, so if they continue to go down because of the fear of the Dixie going back up, then yeah, it'll bring us back into this box. Now, the only time to be really effectively scared or worried about this entire setup, first of all, warning signs would be below this 200 exponential, which is just short of 20,000. Opportunity for those who want to, I suppose, catch a knife and recognize what that refers to. Obviously, catching a knife can mean you get your hands cut, would be in this box, the box of significance again. So we're talking 19,500, 19,750. All of this area is still very appropriate as well to think about catching that falling knife. But if we break down below here, then yeah, new lows most likely going to form as we see that this could end up being a failed breakout. It's happened in the past. It has happened in the past. We had our golden cross over here. We had a deeper retest of it, which is the 200 simple moving average, which again is in the box of significance here. Rallied up and tested it a few times and actually broke down to go down to close to a new low on this one. So again, yeah, let's not get too excited, but let's also not be too pessimistic. I'm quite open to the idea of this actually going on to make higher highs and higher lows and moving up to that measured move around 26,000. I'm still in favour of that. This is only day one after the madness that ensues after an FOMC meeting, so we'll sit back and wait and watch the show. If you're not positioned in things already, then wait for lower. If you are positioned in things like myself, I'm not particularly afraid. I'm going to allow these to play out. If anyone's been on the Telegram recently, you can see that I've managed to get my bot account up to 4,400, give or take. Now, the first half of that was done through bots, so I doubled my money using bots, and the second half, which is another doubling, just over doubling my money, has been done with spot trading, and I'm in quite a sizable spot trade for that account anyway, which is all in basically, because you've got to try and raise the balance on eGold and Jasmy, which is working out pretty well today as well. So, like I say, there's still opportunity in this market, but like I say, I feel as though a lower retest of just 20,000 to maybe 19,700 or thereabouts in this box would be a great opportunity to try and buy the dip, which would, in my opinion, still continue on and go up. I don't think the Dixie's going to go on to make a new all-time high, not on this run anyway. I think this is just the obvious reaction to what took place yesterday, although it definitely is aggressive, and so far we are certainly closing or toying with the idea of closing above 112, which to me is a problem. Below 112, yeah, fine, further down we go, but above 112, yeah, we could come back up to revisit this trend line and see where we go from there. But again, like, you know, central banks are going to help with the movement on this. I just don't see it going on to make a new all-time high, not quite yet. And even if it were to, I still think the markets are able to move up in the face of Dixie. So the everything bounce 2.0 is still on. So just to put it into context, this sort of madness happened in the summer. So we'll just go back to where I said, you know, we're going to have an everything bounce. The first everything bounce, which was here, exactly here. I said, look, we're going to get an everything bounce. It's going to work out. It's going to be fine. Everything's going to be good. So we measure this from around the 13th of June, really, where I was saying it. And then we started to move up. We had a big move up, down, back down to the trend line, and then all the way back up to this trend line. So we've had this same sort of rhythm going on right now. We might be looking for, like I say, a test of these lower zones and then continue back up. Yeah, it doesn't all happen immediately, right? This is why I said give it a period of between 2 to 6 weeks for this sort of thing to play out. So obviously central banks have done their thing, and that's caused the move yesterday. I still feel as though the markets are strong enough to do this everything bounce 2.0. It's still a bear market rally, but we're just reacting and responding to what took place yesterday at the moment. And then once all that is out the way, I think we still continue to move up, and our destination is around about 4,000, 4,100 thereabouts on S&P, and that will allow for everything else to move. But recognize this: central banks are still moving around today. The Bank of England are going to do their thing. I don't know about the Bank of Japan. I need to look a bit closer in the ECB, but they're all going to be doing their thing too, and that's going to impact the Dixie, which again by default will influence the power of the uptrend or downtrend. But I'm not particularly afraid. I'm not particularly scared of this. It's still, I still honestly think it's a buy the dip opportunity on all of these markets. Yeah, I'm not particularly afraid at all. Right, I'm going to leave with you there. So I'm not worried. I don't know if you're worried, but I'm not worried. And it's, like I say, you know, the things that I've chosen recently, like eGold, it's nice to see that they don't even care at all. Up 6, almost 7% today. So yeah, good stuff. Everything's still good stuff. We can trade this market just fine if we can trust it and believe in the signals that we see. Right, thanks for watching. Hope you have a nice day and take it easy.